what we can see is though that on 15 minutes, what we had, of course, there was one leg there where we finished, then we had a pullback. Obviously that pullback never went back to premium, and then we have another high, another low. Price returned back into a premium. We can see with a bare eye that we are in a premium of this leg, but then we actually, from this pullback, took the low with this. Therefore, so I'm going to show you, this was the swing low being taken out. So swing to the downside. Oops, swing to the downside. Okay, so then now what becomes our swing on 15 minutes? So the price is running in an efficient way, and what is now becoming our swing, high and low, that took all of this down, which, you know, we can see there is a lot of noise, is from this high and from this low. Again, we have pushed very much to the downside. We pulled back, but we obviously did not pull back to premium. Premium is all the way there. However, from this pullback, we took our own, so we had a substructural break. Then price returned back into premium, and after that premium, the low has been taken out. Again, it's 15 minutes, therefore a wick is enough. So looking at it from the perspective of where the price had to return to for a continuation down, of course, it's anywhere inside our premium. But what we can see is that actually initially on the 16th, which was Friday, we had a reaction down, but then that was taken out. So now the swing high that was responsible for the move down was taken out with a break of structure to the upside. So again, this is becoming a swing low. This is becoming a swing high. And now we can assume that on 15 minutes, our sentiment is changing. So what we're going to do, we are going to highlight for ourselves our swing low, our swing high, and we are looking for the price to come back into a discounted area. As we are looking at the price, so it's 7.15, we are looking for a prominent area in our discounted area. It doesn't have to be immediate. It doesn't have to be it has to be somewhere. The safest option always is to wait for the price to return to 15 minutes supply. So what I would advise you, if you want to have more relaxed way of trading, if of course you had a supply here, and then taking into consideration, if you do not, set yourself an alarm at that one, and once price reaches it, which it did now, ding, 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 your alarm will go off. And this is where now you can consider if you are going to take a trade from any of those areas. So what we want to see, of course, we want to see 1 minute, and we want to see, how is the price actually mitigated here, if we have any areas that we could come back to. So I just want to establish the order flow a little bit on 1 minute. So we can have one leg, pull back, then we have down leg here. So actually, again, for the change of the sentiment on 1 minute, we would have needed for this high to be taken out, then price returned to premium, and then pushed down to the downside. So then eventually we can see that this was the last high that was running efficiently, and then we took that high out. So we have a break of structure to the upside. As we have that break of structure to the upside, so we can see is the low, is the high. Okay, so price created the high. So what we can see is that we have actually mitigated this below. Obviously, what we can also do, we can recognize substructural breaks. So we can see that after price returned into this small demand on 1 minute, we had price substructurally breaking here. So we have substructure up, and then as he broke it, and to be fair, you broke it, he then returned, so then you could have a new leg, and then price broke it to the upside again. So we had substructural break again. Like, this is very substructurally looking at the price action. Then price broke the high again with this move coming back to the extreme, then breaking up again. And actually we can see that substructurally this is the only area that hasn't been mitigated. Then price broke the high again, and then returned, regained its efficiency, broke the high, regained efficiency, broke the high, regained efficiency, did not break the high, and this was the move then next move. So then we can see that this was the low, this was the high, and then here we never returned back into a premium. Therefore, we also have orders open here. Now, of course, as we are looking at the swing leg of the 1 minute, so actually the swing leg of 1 minute would be counted from this low to take this high. Arguably now that I've actually extended it to this low, because that's the proper way of doing it. Okay. Arguably, we could say, is it mitigated? Well, he kind of is. He was tapped. So if it is mitigated, therefore, the price perhaps should only come back to this demand. Okay. So now we have a refined area inside of our demand that we are waiting for to potentially take buys. The reason why we want to take buys, well, because even though we tapped into a supply on inefficient leg, we actually took the high of the price that regained its efficiency, and now obviously we also are sitting inside of the demand of the 4H, so more than comfortable to be buying from here. All right, so let's see what the price is going to do. We are going into our charts. We can see a reaction from our most liked area. Price is going in deeper. I've got my change of character and I would buy from here. So what time is that? London open, but obviously the markets were closed, so it wasn't actually the open. Now, what I've noticed this week is on those first taps, price is likely to move off, then potentially build some order flow, then react to the premium of the last leg on 1 minute, then tap in deeper and then actually go. And this is majority of the time when I was stopped out. However, let's test through this week what happened, because that was keep on happening to me. So I want to test it, so then I can see how we could have taken those better entries, the entries that existed and better entries, because this is the best way that we can learn. So triggered in the trade. Now, one thing that we want to establish, of course, so let me go to 15 minutes. Now, what we want to establish is how far we can expect for the price to pull back, right? Because when we know, then obviously that is going to help us with understanding where we could go with our targets. So let me just show you here. What we have is obviously we need to take it from this high. So now, one thing that I want to highlight to you is that, you know, price reacted to a supply, rightly so. We had a supply there. We broke the structure on the way up there. Then we moved down and we broke internal structures. So the price was taking its own lows out, essentially. So we have a low, and that is substructural low rather than, you know, overall low. And then price returned. Boy failed, and then he went down. So, you know, when price is working so substructurally, sometimes I guess we can get too caught up in that. And what the price did, came back, I guess that was over the Asia session, came back, and then it took, well, first of all, it gave us change of character. So we have a change of character down. Secondly, it took out this internal leg. Okay, so we have a substructural leg down taken out. Now, of course, that created us a new supply at the extreme. However, because I am more buy bias, because we have changed the overall sentiment, this is where I'll be looking more for buys. However, I'll be acknowledging that my plans don't have to work. So I will be looking at the first supply in my premium, where I could run my trade to. Okay, so then it won't be 10R by it, but looking at it now internally, so what I can see, that we have the high, we have the low. So this is what caused the choke first. And even on the choke, obviously, we never pulled back. Then if we even take into consideration the whole leg, again, we've got, you know, a lot of imbalance here. When we look at things more, so I'm going to leave that order there. When we have more things pull back, price came back, price internally try to regain its efficiency by breaking those lows, coming back into the premium, pushing again. But then in order for us to consider again an order flow to regain its efficiency, we would need for the price now to react to premium again and break the low again. Otherwise, it is not valid. So we're just acknowledging what is going on. This is mitigated. This may mitigate for efficient order flow on 15 minutes. So now what we can see is that our also first supply is here. So this is where we may run into trouble. On 1 minute, it is actually mitigated. Considering taking the low, has it mitigated in terms of here? Yeah. So I'm not that worried about it. I'm also not that worried about anything here. Everything looks mitigated, maybe except for this high and low. Yeah, that's not fully mitigated. Perhaps this is actually where we will see some type of first of the reactions on 1 minute before we see reactions on 15 minutes. So let's see. So I'm going to click like this because I want to see whether there were some other opportunities, and how I can monitor for other opportunities is also on 15 minutes, because if we are going to get change of character, and a change of character I would consider here, okay, because that was the last supply taking its on low out, therefore that would be a chalk up. If I get a chalk up, I can potentially buy continuations. So what can we see? Okay, a lot of sideways moving movement. So let's go to 1 minute. Let's see what's happening. So we would be now risk-free on our trade. After all, this was last high. No, it was last internal legs. What did we say? Internal legs. Yes. So this was the first 1 minute area inside of our premium. And we said, oh, I said, oh, everything looks mitigated, but look exactly where price reacted to, actually to that. Price said, I don't care, it's mitigated. This is what we're reacting to. Okay, cool. So now I would need for this to be taken out, or for the price to do something solid. Obviously, the price was moving sideways, which there is nothing really we can do about it. Now we are on 15 minutes. I need to wait on 15 minutes for the moves, because we are just stuck in a range. We moved. So we have a change of character here. We are still sitting in that trade. We didn't take the lot out. No, we did not. Therefore, now I would, if we are going to react now, let me put it this way. I already know that we are in a premium of this leg. So now, if there are going to be reactions, that's fine. Also, I'm going to delete this because I know that we already hit the discount area. So now I have my demand. Now what I would want to see is for the price to return here for continuation buys. So let's see what the price is going to do. And now, one thing though, if you want to have less losses and more high probability setups, you also always want to go in the direction of, well, overall where the market is moving, but 15 minutes obviously is a time frame that we follow very strongly around. So price tapped into a supply that we said that we're expecting reaction to. Price will still react, whether the price is going to hold it or not. Now, one indicator that I want you to pay attention to, that this is not going to hold, is because we wicked it, and now potentially we are going to return here for continuation to the upside. Okay, now you could play the pullback, okay, but the pullback, you never know how far the pullback is going to come back to, whether the pullback actually will come back deep into a discounted area into 15 minutes, or if it's just going to stall. So I would it's your option what you are going to do. You can sell back down, but I think it would be safer to go in the direction of the market. So then again, they say the safest option here now would be to wait for the price to hit our demand. Ding, ding, ding. The alarm is going off. That way, you are going to avoid a lot of inducement, especially on 1 minute. And if it's confusing you in any way, like for example, here, price started moving, etc., etc. However, even though we had a change of character, and even though we were in discounted area, only because we are in discounted area doesn't mean that we have to move off there. we are in a discounted area, so that means we may, in a certain area where there are orders stacked up, start picking up the orders. And obviously on 1 minute, we need to see that this is last mitigated high, because then we moved, we mitigated everything really nicely. We came back. Yes, we created a lot of liquidity, and now we are moving down. So then our swing low is now taken again by this high. So now this is our last high after this low has been taken out. But now let's establish here inside of our 15 minutes area, what could be the areas that we are working with. So obviously with bare eye, what I can see is that from this low to this high, I would take this high into consideration because, well, that's what took these highs out, I guess, because this created equal highs. We never mitigated. So what I can see here is a failed reaction on seconds time frame or something is just the pattern on candlesticks, which I also will highlight to you. And also here we have our extreme. Could the price react to anything? I mean, it shouldn't, but you know, who we are to say that it shouldn't. So now we are waiting for the price to return into one of our areas. Now we tapped and we are reacting to this. Now, one thing I want to know, why we mitigated it. So it's already mitigated. Could be just liquidity. Could be just a reaction. Did we take the high? We did. Now, okay, so now we had that extra confirmation because we had, well, break or change of character to the upside. Then price mitigated. And then we had price giving us a minor break up. So we could start following that order flow and say, well, we are ready to buy from here. So let's try. 3, I'm good with 3. Let's see. Tapped into the trade. And we are moving. Okay. So let's see next. All right, cool. So again, my target would be now, because we came back to the premium of this leg, now I can target this premium. And the first unmitigated area is actually up here, I believe. So this could be my target. Obviously, 10R would be the initial target. This is just for the extras that I would keep running. Now we had, yeah, push. We broke the minor structure again. Okay. Then from this low, we created this high. We never mitigated it. Therefore, orders here are open. Then after that pullback, we took the high again. The price is inefficient, but what we could do, actually, hold on, let me move this. This is the low, this is the high. Efficient order flow. I did not see it, see? So we have efficient order flow from this low to this high. We have efficient order flow. There are not entries, however. Then we have again efficient order flow. So I see, I would feel so like nervous about it, but everything has mitigated, and you could literally just be following the order flow around and keep on adding your positions. So another 3 pips position. There was efficient order flow, but I believe there was no entry. But here, if you, I would take the wick into consideration. So with a wick, I probably wouldn't be triggered. If you actually look at it, I don't think I'd be triggered. My position wouldn't be filled. So there is a lack of trigger here. But if you went with this, then you could run, you know, this position like something like this. Obviously, it would be potentially advisable to take the whole lot into consideration. So maybe the stop loss would be a little bit bigger in reality, and this could be another entry. So everything here is mitigated. We've got efficient order flow. Therefore, all of this is a buildup of liquidity now in a way, because everything's mitigated. and this is starting to create liquidity trend line. We do have an extreme here, but everything looks pretty tight there. Now, the only way we may come back is when we break a high on 15 minutes, and then we will want so we need to take this high out and we will start pulling back again. Because when you are following an order flow on 1 minute, then just always monitor 15 minutes because as, for example, let me show you. So this is some type of level on 15 minutes, and then price is moving down, and then we are heading for this high, okay, to take it out. So we are actually, let's say we are in an uptrend, and then here we had our demand, okay? So we had our demand, we tapped into a demand, and we're heading for this high. So even though, so this is 15 minutes leg, but inside of the 15 minutes leg on 1 minute, we will be trending on 1 minute, okay? And it is safe to follow the 1 minute order flow until we break the high. So what I mean by follow, keep on adding the positions, because once we break a structure, especially major, a high or a low, we are potentially due a correction for then continuation. So then once the price is here with the 1 minute order flow after the break of the high or the low, do not start adding your positions on 1 minute again. Wait then for the price to return back into the discount to one of the demands, and then again drop on 1 minute, and then when price starts go into the upside, you can again start joining with the 1 minute order flow. So let's see what's next. Let's see what's next. Okay, cool. So we are heading for those highs, therefore I wouldn't be adding any more positions on 1 minute. 15 minutes. All right, so this is still running. Now seeing what we have, definitely going with this position for this supply. Well, if I can squeeze in 10, obviously I will see on 1 minute what we have there. Now as well, what we have done is obviously we took this high out. So we have the low, we've got the high. And after that, we can see that we also have our demand there. All right. So now let's see how far. Okay, price starting to pull back. While we're reacting to here, imbalance. Okay, what I want to do whenever we have supplies, demands, etc., I want to highlight those imbalances. And when I put just, you know, this, you can't really see. I want it to stand out because then price very often perhaps will not make it back. It will address the imbalance like it did here, and it will start moving in a certain direction. So also it can help with, you know, holding trades, etc. So by the way, this trade would hit 10R. Now, one position here would, oh yeah, it would be 10R already. So that's a 20-hour day so far on Monday, which was a bank holiday. And then here, where did we enter this? We entered it here. It moved. We entered it here. And this is where the price is still running. All right. Now, we recognized that we have a new demand on our 15 minutes leg. So let me just highlight that 15 minutes leg again. So this is the low, this is the high is actually here now. Okay, so this is where we're starting to see that imbalance. So we have 15 minutes. And now again, what is helpful to see here, can you see those wicks met on 15 minutes? So potential imbalance is just here left. Okay, I'm not saying that means anything, I'm just highlighting it. And then obviously you will have to amend it on your lower time frame, that this is where the imbalance is. And then what we are seeing here is that we had, okay, so that was one of our entries. We had the low, we had the high, we mitigated. So now I'm going to delete the mitigated areas. And then we had the low and we had the high and we never mitigated, which also aligns now with our 15 minutes imbalance. Interesting. Now, is that 15 minute, well, 1 minute imbalance inside of the discount? The wicks of it are. So I need price to come back to discount, not compromises. Then here everything's mitigated, mitigated, mitigated. In terms of 15 minutes, How strong is this area? Let's remind ourselves. It's a supply. It's stacked with liquidity. We have, again, one thing that we have here, tiny bit of imbalance. So this is where we could expect for the sweep to happen, perhaps. So let's see now if our imbalance is there. It's here. And obviously we have huge imbalance there. So, all right, that's fine. But the price still, I remember it did not quite make it to this supply, which is fine. All right. So we had that minor break, and now this would be in a discounted area. So now, again, we are waiting for the price to come back into a discounted area. Price, address the imbalance because everything else was balanced out, which also is low, high, low, high, mitigated, low, high, perhaps unmitigated. No, I think he did mitigate, low, high. Then from the last mitigated leg, this was the last mitigated leg. No, these were the last mitigated legs. Here we had liquidity. So price reacted to the imbalance. So he grabbed liquidity and off he goes. All right, cool. So you do you. And then let's see what's next. So we have inefficient order flow on 15 minutes. Now we are starting to react to that supply that has built itself on that imbalance here. We are starting to move down, so nothing. Up. Okay, so we had inefficient order flow. So now we had substructural break, substructure up. Now I'm going to delete these. We already took those. I'm going to delete this. Okay, cool. Now, okay, we have a break of structure to the upside. So we have a new low and a new high. The price is inefficient. We returned back into a supply.